Hello everyone, welcome to another exciting video. So most of you will be like, why do I always make my video strictly on the point I want to make, no show off and all this and all that? The reason is because I'm not posting videos to excite anybody, but what I do is try to pass out the little knowledge I have to somebody else there that can need it for free. That's all I do. So straightforward, how I got this setup is very simple. You see, the market has been a kind of ranging for a couple of 1, 2, 3, 4 days now. The market has been ranging, go up, come down, go up, come down. So when I woke up this morning, I saw the same market going up. Okay, so I saw the same market going up, and I don't have to jump in just that way. Okay, I don't just have to, because I saw the market making higher highs, I don't have to jump in that way. So when I see some kind of movement here, what I did was I switched to a lower time frame, because this is another trick. When you don't actually understand what is going on in the time frame you normally trade, what you should do is you switch higher or you switch lower, depending on what you are looking at for. So if you are confused on getting your trend in the time frame you're trading, what you do is switch higher. Probably in 4 hours you're going to have a clear view of your trend. But if you are confused of getting your entry, you switch to a lower time frame. So if your entry is normally 15 minutes and you get confused on getting a good entry on 15 minutes, you want to get this sniper entry, what you have to do is you switch to 5 minutes. This is what I do. I'm not saying it generally, everybody has how they do their thing. So when I got this morning and I saw this move here, I decided to switch to a lower time frame. Let me see actually what is going on. So I switched to 5 minutes time frame. I was switching to 5 minutes time frame because I know what I'm looking for in volatility 25 index. You should understand what you're looking for, and anytime you come to the market, you focus on what you're looking for. So in volatility 25 index, I know my strategy there is Trendline. That's what I use in killing volatility 25. Trendline in support with psychological level, but mostly I must have that trendline and I will check the psychological level. Okay, so when I come to 5 minutes time, I check out what I'm looking for. So I pull out my trend line, starting from this first point, which is at this very place. I pull the trend line to this second. Okay, so now if you check up here, you see what happened there. Because most of you will be like, so guy, why didn't you draw the trend line from the peak to the peak? That's not how I do. I try to get in between the body and the shadow. I don't just get to the body only, body to body or shadow to shadow. I don't do that. I keep it in between the body and the shadow, not at the peak of the shadow, neither on the body. So I keep it in between. So this is how I pull out my trend line. From here, I got this point. So with this, I'm okay for my trend line. So if you watch it closely, it's not actually on the peak of the price, that's on the peak of the shadow of the price, neither is it on the body of the candle. So I do keep it in between, because I know some of you will be confusing why I do that. The reason is because this trend line you see represents my resistance zone. So since it represents my resistance, and I'm not seeing my resistance as a single line, I'm seeing my resistance as a zone. When I say a zone, I mean an area, so not just this single line. So if it is an area, I have to keep the single line probably in between the area that I think is my resistance. So up here is still my resistance zone, down here is still my resistance zone. So this line just have to place it here. Okay, not actually that the line is what I'm looking at for. So I had to wait for the candle to come back again to that same place, and look at what happened. It didn't just run boom and hit that place. It came here, retested, push up. At this very point, it retested down, push up, it tested again. Here it was looking for those that are always eager to jump in. That was what the market was looking for here. The market keep on looking for them, keep on triggering them, and they were jumping in and out, jump in, jump out, jump in, jump out. Okay, so lastly the market now push down to this very line again. So if I try to zoom it in, this is what I mean. So here was our first touch, second, and here is the third touch. So on this third touch, that's why I started looking at to go in. But I don't just have to jump in because I don't know what the market will do. Remember, the market doesn't have a limit on the buying movement, neither does it have a limit on the selling movement. The market can keep selling or keep buying for a couple of days, couple of hours, even week. Okay, so you can't just predict that the market has exhausted its strength. So what you have to do is to wait for what you know to occur, and once what you know occur, you go in, set your stop loss. So here I waited patiently, and the market retraced the third time, and when it came the third time, I don't just hold in. I have to wait for the market to give me a kind of entry trigger, and the entry trigger that I got was multiple rejections here. I got these multiple rejections for my entry trigger. Those of you that have been watching my video previously, I give you up to 2 to 3 entry triggers that I use. I give you the multiple rejections, I give you candlestick, bullish and bearish, the M pattern, the top, double bottom, and head and shoulder. These are the major ones that I do use. So having seen my multiple rejections, I have to go in. And not just that I went in also, and I dropped the signal for my group. So let me show you. So I dropped this and this. So here was the signal for volatility 25. Okay, here is the volatility 25 signal. Here is volatility 10, and here is SAUSD, popularly known as gold. So all the pairs paid us, all paid. So this is another signal I dropped now for GBP USD. So here is volatility 10, it paid massively. Volatility 10 paid massively. I think I still have a running position on that. Gold also paid, SAUSD also paid massively. And here is volatility 25, paid massively also. Okay, so guys, that is it. I think I still have a good position running in volatility 10. Okay, yeah, here is my volatility 10. I've closed most of the position. The market is retracing back. So at a point I told them to take profit on this trade. Yeah, here I told them to close volatility 10 because I saw the move that was coming. So we closed at this point. So this is a very low loss size, 2.50. The lowest loss size for volatility 10 is 0.30. So using 2.50, 1.50 is not high. Okay, it's a very good loss size to use. Here also I use 2.50 and 0.5. 0.5 is the lowest loss size for volatility 25. 0.5 is the lowest loss size for volatility 25. So the issue is not about making profit. Check out the loss size that has been used. Okay, because you can use a very big loss size, and when the market moves 2 candles, you make a huge amount of money. But when you use a lower loss size and also still make a good amount of money, then you know you are knowing, you know what you are doing. So how to know that this one knows what you are doing is when you use a lower loss size and still make a good profit. So you mustn't take high risk before you make a good profit. So that is the message. So guys, I don't want to make the video a long one, I just have to explain to us what I saw in the market and how I got the entries for those in the group, the trade we took, how it come about, and those that not yet in the group, how we do it. Okay, you can also learn and start doing it on your own. So see you guys in the next video. Drop your messages, drop your comments, drop your questions. I will attend to it. Away guys, away.